Happy Friday, ladies and gentlemen, and welcome back. I'm your friendly neighborhood PM here to give you your top 3 market points of the week. Now, I know you are all anxiously awaiting to get on to your Thanksgiving week, so without further ado, let's dive right in. At point number 3, it was existing home sales. So, existing home sales increased by 3.4% in the month of October. This was its largest increase since February. This all comes as mortgage rates fell to a near 2-year low. Now, however, mortgage rates have stayed right around that 7% range. Now, this increase in sales is a welcome sight. However, this has continued to constrain activity as mortgage rates have remained higher. But this could be a sign that more and more buyers and sellers are starting to adjust to the fact that rates are going to stay around 6 to 7% over the long term, and maybe that's become the more new normal, so to speak. So we're hoping to see some more increased activity on the housing market heading into these upcoming months. At point number 2, it was Target releasing their earnings. So Target fell over 20% after they released their earnings earlier this week, after they cut their full year profit guidance. In addition to that, they also mentioned that they had held on to more inventory than previously expected because of the port strikes, leading to increased incurred costs. On top of that, they also signaled that more and more shoppers are spending on less non-essential goods. Now, this is a stark contrast from a lot of their competitors, such as Walmart, who had a great earnings report, raising their forward guidance, also indicating they're starting to get more high-income shoppers and gaining market share in that area. So it doesn't bode well for Target, who has continued to kind of struggle on their turnaround efforts right now. And finally, number 1, you all might have guessed it, you might not have, but it's been the marquee name. We mentioned it last week. It was Nvidia releasing their earnings earlier this week. Now, Nvidia pretty much smashed across the board, which has become largely what's come to be expected for the AI company and the semiconductor designer. They saw revenues year over year increased by 94%. Now, this continues to just smash growth expectations for the company. They have only missed expectations by analysts 1 quarter in the past 5 years. That is an outstanding mark to hit, and their growth continues to be near triple digits. Now, on top of that, they are also now starting to deliver their new Blackwell AI chip, and they also indicated on their earnings call that demand is going to outstrip supply well into 2026. So they can't essentially make these things fast enough. So the question is, how long can this growth on these revenue fronts continue to grow for Nvidia? Is it going to be 100% year over year? You know, most people would expect not, but we're going to keep going until the music stops, so to speak. Now, that does it for your top 3 market points this week. What's coming up next week? Well, obviously next week is Thanksgiving week. So keep that in mind. Watch some football, eat some turkey. However, if you're still looking for an economic point to zero in on next week, we'll be keeping an eye on core PCE data. Once again, this is the Fed's preferred inflationary gauge, so we're going to keep an eye on that. However, I will be traveling for Thanksgiving, and I will be gone the week after. So I will not be here to update you on the video. So stay tuned, do some research on your own while you get the chance. And I will see you the second week of December right back here as always. But once again, I want you to go and enjoy your weekend. If you have additional questions, dig into the written weekend review or reach out to your financial advisor. We'll see you the same time out in December in a couple weeks. Have a great holiday, and we'll see you soon. Thanks again. Bye.